Glad to have you back. It's still Business Daily right here on Trust Television. Of course, before we went to that break, I did mention to you that the stock market has been on rampage this week with the All Share Index recording an all-time high there. Of course, a lot of activities has happened in that segment in the last couple of days. Seems to be the only component of the economy that is, performing more like performing so separately from the larger economy. Let's talk to Vice Chairman of the Board of Highcap Securities, Mr. David Adonri, who joins me live on phone now from the trading floor of the Nigerian Stock Exchange. Good morning, Mr. Adonri.
Thank you very much, Yusuf, and good morning to all the viewers. Pleasure being with you today.
Thank you so much. Of course, Prof, as one of the doing of the stock exchange, we know you are highly experienced. But talk to us about the market being on rampage lately. We see the All Share Index recording a new high, hitting an all-time high. Tell us, what are the factors driving this bullish trend?
Yes, this bullish trend started in 2023, soon after President Tinubu hit the ground running and pronounced those audacious market reforms. So following those audacious reforms, the market started reacting, apparently driven by the sentiments from those very, very big pronouncements. And since then, it's like those market reforms resonated well with the investors, and the reaction has remained positive. It's even been solidified in recent times, because initially those pronouncements, they were policies that were formulated. And those policies affected the fundamentals of listed companies negatively initially. But that did not dampen the enthusiasm of investors, because they still believe that the reforms were essential for the corrections that were needed in the economy at that time and also into the future. So along the line, 2024, we started seeing some positive impacts of those reforms on the fundamentals of those companies whose balance sheets were wounded from the floating of the naira, to the point that now, instead of the reforms, instead of the market being depressed as a result of the negative impact initially, the reforms have now been translated into positive reality, because those companies that were injured are now bouncing back powerfully, especially in the consumer goods sector. A lot of them are now coming back with very, very impressive profits, indicating therefore that they have overcome that distress and they are now on growth trajectory. So the reaction of investors is no longer based on sentiments. The market is no longer driven by sentiments, but now by concrete realities of positive changes affecting the fundamentals of the market. Beyond that, we have also been seeing the fundamentals of the economy improving. The foreign exchange market has been very stable, to the point that foreign investors can now see and plan appropriately for their incursion into the market without any fear. Their funds that were trapped in the past had also been remitted to their home countries. So at the foreign end, the foreign portfolio investment has been pouring in. So when consolidated with the increasing confidence of domestic investors, we are now seeing a rally that is surging with undiminished intensity, in spite of the fact that a lot of efforts have been made to divert attention of investors away from the secondary market into the primary market. with the banking recapitalization exercise. Some other companies who have come to the equities market to raise funds with a view to reducing the pressure on the secondary market, yet the market has remained attractive, both to domestic and foreign investors. Now, there was something you mentioned that apparently the market appears to be the only sector of the economy that is booming, whereas the other sectors are still struggling. Yeah, because the market does not only look at what is happening immediately. The market projects into the future. Investment is actually futuristic, in which case investors look at the policies that are on ground today and the indications that these will have for the future. But by and large, we are also seeing some positive developments in the macroeconomy. For instance, the pressure on the foreign exchange market has been reduced by virtue of the fact that most of the petroleum products that we now consume, they are produced locally by Dangote refinery, and the dislocation in logistics and supply of petroleum products to distribution outlets has become something of the past. We have smooth transportation now, everything is moving smoothly, except for the vehicles that are coming from terrorists and bandits. Every other area of the economy appears to be looking up. So those are the things that investors are reacting to, not just domestically, but internationally. And the war, the trade war that President Trump has provoked, is also making foreign investors to direct their attention to the Nigerian economy, which for all intents and purposes is showing signs of recovery and prospects. Yusuf. So those are the things that are driving the market. And with the way the oil share index is going now, we've already passed 130,000 points.
Absolutely.
And there are speculations that this index can hit 200,000 points this year. But when the market is difficult to predict because of the uncertainties that we all face in both the domestic economy and the global economy. But with the way the economy is now and with the way the fundamentals of the market is getting stronger, one can only say that, that there are possibilities of the oil share index continuing to surge forward. Thank you, Yusuf, for the elaborate time you have given me to dwell on this issue today.
Impressive, Prof. There was something you said. You said the fundamentals of the economy, the large economy, are looking up. There are a lot of Nigerians who may not agree with you, depending on their current, the current high cost of living, and of course the issue around difficulties in, assessing a lot of things. Not that some of them are not available, but the monies are not available in their pocket. What makes you think that the fundamentals of the larger economy are looking up? Are you using the stock market to measure the economic indices?
Funny enough, the market is starting to act as a barometer for the economy because, like I said, the macroeconomy appears to be recovering very fast. At least from the macroeconomic indicators we are seeing, the rebate inflation rate has continued to moderate. It's been declining steadily for some time, and is hovering around 22% now. Remember that the forecast in the budget is 15% at the end of the year. It appears to be moving gradually towards that. So, which means there are signs that inflation rate is moderating, which is a positive indicator. Then when you now also translate it to what is happening in the foreign exchange market, the economy is largely import dependent because of the poor structure of the economy that has persisted for a very long time. So anything that happens in the foreign exchange market directly affects the stability of prices in the Nigerian domestic market. But we are seeing a stable foreign exchange market. The value of the naira has been holding around 1,500 to 1,600 naira per dollar for quite some time, which is a measure of stability, which enables stakeholders in the economy to plan properly. So with the stability of foreign exchange in the foreign exchange market, with reducing inflation rate, and also there are signals that interest rate is also reducing. Because if you look at the recent issuance of treasury bills and even savings bonds, the benchmark rates have declined considerably, and yet these issues have been seriously oversubscribed. Indicating therefore that the confidence in the macroeconomy is growing. In fact, it is growing and boosting investors' confidence. And these are the things that both domestic and foreign investors are looking at and interpreting. They are interrogating and interpreting to be bright prospects, both for the economy and also the market. So those are the issues that are driving the market. And there is actually a convergence now. We are seeing a convergence between what is happening in the macroeconomy and in the capital market.
Okay. All right, Prof. I understand your position with regards to macroeconomic indices. Improving largely. But can you say the same with regards to the microeconomy, where you have the larger population of Nigeria dwelling?
Yeah, you are actually correct, because what we are still seeing is a macroeconomy that is showing signs of improvement, and yet that improvement has not trickled down to the microeconomy in terms of the ordinary people on the streets feeling the impacts of the improvement in the fundamentals of the macroeconomy. Well, of course, there's usually a lag between when policies come into effect and then the long-term reactions that emanate from the politics on the lives of the citizens. So, but the analysts and those who understand how economy works are already interpreting that sooner or later there will be transmission from the policy level to concrete realities on ground. Although what the people are facing now is not quite to the level that they will say, okay, yeah, that things have started reversing in their favor. But gradually you can be noticing some changes, Yusuf. You can see stability in foreign exchange. The naira is stable now. The scarcity of naira is no longer an issue for manufacturers. Then look at availability of fuel. The hiccup in distribution, where you see queues at the petrol stations, and price fluctuations all over the places. It's no longer, you are now seeing price of gasoline, trending downwards gradually. If you are also a commuter, if you commute from city to city, you see a lot of CNG stations beside the cities, where a lot of these buses, drive in to charging their gas cylinders, indicating therefore that the CNG is also coming up gradually. So those are the little things that are coming up. And if at the end of the day, the federal government of Nigeria succeeds in its responsibility of making lives and property safe for the people, and the rural economy that is currently on the stranglehold of terrorists and bandits, that the rural economy is now liberated and released back to the people, you start seeing the impact on agricultural produce, the increase in output, and also the reduction in price. If the food inflation that is still a headache to the economy.
Absolutely.
That is still fueling inflation a little bit, because that the farm economy, the agrarian economy of Nigeria, which is actually the backbone of the economy, is still distressed and still troubled by pervasive insecurity. So if the federal government of Nigeria is able to mobilize and put boots on ground and annihilate terrorism, mercilessly deal with terrorism, I can tell you that in months, this economy will become very, very prosperous, and the prosperity will trickle down to the micro level of the economy, Yusuf.
Indeed, quite a whole, very elaborate analysis there, I would say. Of course, from what I can actually take from that is that Nigerians need to be patient, but with time, what the gain we're seeing from the macroeconomy will trickle down to them. Let's move away from that now. Talk about the sectors of the sectorial performances in the market. We saw the banking sector doing so well. Last week we saw the JITCO talking about the Guaranteed Trust Holding Company. The share price crossed 100 naira mark for the first time in the history of Nigeria. We're seeing a banking stock crossing 100 naira mark. And of course, this Stanbic IBTC also coming closely there. I think it closed last week about 99 naira there as well per share there. Talk to us about what is making the banking sector so, peculiar to investors.
The Nigerian economy is improperly structured, because it's not a production-driven economy. It's a mercantile import-driven economy.
Absolutely.
Wherein short-term finance is the dominant factor of the economy. And short-term finance is what banks provide, short-term trade finance. So that therefore puts banks at the critical point of the economy, so that they actually drive the fundamentals of this economy mainly. Perhaps until when we start seeing the productive sector gathering momentum, like what Adonri is doing now, putting a spark into the productive economy. So now, JITCO blazed the trail recently when the company listed its shares on London Stock Exchange. The about 2.2 billion shares of JITCO were listed on London Stock Exchange at about 70 naira equivalent per share. But last week, the price of JITCO in London cost 100. At a point, I think it hit 120 naira per share. So that in itself caused a tumultuous response in the Nigerian market, that if JITCO can be selling at 120 naira offshore, and at that time it was still holding around 90 or 80 something naira here, that elicited a lot of interest and attraction from investors, who then increased their request, their demand for JITCO. So JITCO then became the arrowhead. That this JITCO, which is actually a front-running Tier 1 bank, is trading at over 100 naira. So it crossed 100 naira last week on NGX, although it later pulled back a little bit. But if that is the case, and some other banks that are equally strong, with strong fundamentals, all of them moving around the same level. But when you look at the fundamentals of Zenith Bank, look at the fundamentals of UBA, they are all revolving around the same level. So with that big disparity, the investors now started looking at the other banks. So that movement in JITCO offshore pulled all the other banks.
Hello, Prof, are you there? Oh, he seems to have lost Prof. We hope to reconnect with him. He's giving us a very interesting analysis there with regards to the performance of the market and how some of the sectors are doing. He was speaking about the performance of JITCO, who is doing well offshore and is also doing well back at home there, talking about the trading floor of the Nigerian Stock Exchange. And that is also, more like a rubbing on other banks who are also hovering around the same level with JITCO there. Let's go on a very quick break. When we come back, we hope to get Prof to join us back on the show. Don't go away. Glad to have you back there. We have Prof back now online. Prof, before we went on that short break due to network issue, you were giving analysis about the banking sector performance on the NGS, both offshore and of course on the NGS trading floor. Continue along your thoughts.
Thank you very much. I said that GTCO had blazed the trail and is behind the rally that we're witnessing the banking sector of the market now. But the silent thing that has taken everybody by surprise is actually the rally in Stanbic IBTC. That bank operates in a silent manner out of the glare of most investors in the market, and it has a way of crawling, and surging in a manner that nobody notices until it has gotten to a point that will surprise everybody. So the movement of Stanbic is quite spectacular. It's very, very impressive, and I think it's giving GTCO a hot challenge because Stanbic is a little bit mimicking the character of GTCO, because Stanbic is not just a Nigerian entity. Stanbic Bank is more like a global entity, with tentacles all over the world, just like what GTCO is trying to do now. So it's therefore not surprising that the two banks are now moving toe to toe and neck to neck. But investors will also be looking a lot at Zenith Bank, which is a very powerful bank with strong base, very strong and impressive fundamentals. And so as those two banks are surging forward, I think Zenith Bank is also being pulled along. And at the end of the day, we'll see a kind of dual movement, which we notice in some sectors of the market. Like in the agri sector, if Presco oil is moving, and the business identities of both Presco and Okomo oil appear to be the same, because they operate in the same sector, and their product lines are also very much alike.
Right.
So when Okomo oil moves, Presco moves, and vice versa. We'll be seeing that in the banking sector too.
All right, impressive there. Prof, there is an area I also want us to touch before we go on the show. NNPCL has deferred its listing to maybe 2028. Why is the market reacting to that? The expectation was so high that NNPCL was going to list this year.
Yes, it's very disappointing. They have therefore given a room for Dangote refinery to shine them, because I believe that Dangote refinery will hit the market even much earlier. So as of now, we are talking of a Dangote fertilizer coming in a little bit from now. We are also talking of Dangote petrochemicals coming in before the big masquerade shows up in the market. So we were hoping that NNPCL will be a forerunner, that it will blaze the trail before Dangote moves in, But it's like an elbow smash that Dangote is inflicting on NNPCL now, with the strength of their listing in the market to 2028 is so far off.
Absolutely.
But I think perhaps they want to put their house in order before exposing themselves to the scrutiny of the investing public.
Absolutely, most probably. Prof, before we go now, the MPC, talking about the Monetary Policy Committee of the Central Bank of Nigeria, will be meeting today and tomorrow. Of course, a lot of decisions will be made with regards to monetary policy rate as well. How are the investors in the capital market? What is their expectation with regards to the outcome? How are they reacting?
Yes, generally, with the improvements in macroeconomic indicators, especially the inflation rate, which has been trending downwards in recent past, one would expect the benchmark rate to also be moderated by MPC. We're hoping that NPR will use the opportunity to reduce the NPR. But the challenges that face the economy, they are still enormous. Usually external shock. You know, the unpredictability surrounding the main export earner, which is crude oil, as a result of the piece of the graveyard in the Middle East. Nobody knows when that the conflict will erupt there again. Demands caution on the part of the committee members, to assess and make projections in terms of what they anticipate can happen from the external sector, so that they don't prematurely reduce the benchmark rate only for threats to erupt thereafter. And if you also look at the domestic economy, things are looking up, everything is fine, but yet the critical threat of insecurity is posing a serious risk to macroeconomic stability. The inflation rate itself, which can tip or flip over at any time if very drastic measures are not taken to permanently annihilate insecurity. Having said that, but one must also be ready to what the military is doing, because they have stepped up the offensive against the insurgents. They are no longer waiting in their barracks to defend themselves against the insurgents. They are now involved in counter-offensive actions.
All right.
What is left now is for the country to mobilize fully against the insurgents. And so, but MPC, I think they may hold the rates. They may still hold the rates and watch.
They may still hold the rate and watch. In 30 seconds, what's the outlook for today and, of course, for the week as well? In 30 seconds, Prof.
No, the market is still smiling and is still looking up. So we believe that the market will still close positively today. And the week, we expect that the market will still close positively in the week.
All right. David Adonri, Vice Chairman of the Board, Highcap Securities, thank you so much for your time on Business Daily and, of course, for your detailed analysis of the market performance. We appreciate your time.
Thank you. Always a pleasure.